that capture a billion.
Good afternoon, welcome to Countdown right here on Bloomberg Quint. The markets are quiet, about 0.25% higher though in the green. So from the red, we're now decisively in the green for most part of the trading day, which is not a bad sign. The Nifty Bank could have done a bit better though. We're not seeing that happen. So very flat in the session today despite having a fairly interesting ride in trade yesterday. However, in the green. You would see though that the mid caps and the small caps, which for the better part of the day were in the green, have stayed just about steady, about 0.25% higher for the mid caps as well as the small cap indices. So no big changes out there. Frankly, it's just a low lying day, even though the volumes would have been a bit higher than what we would have seen over the course of trade yesterday or otherwise. 22,000 crores done on the cash market already, F&O volumes perking up. We might actually nudge the 10 lakh crore mark in the session today. However, let's talk about the large caps and what some of the specific names are doing in the session today. Even Stevens, so which is not a bad sign because when we started off, we were way into the reds were dominating the screen. Now it's about even Stevens. Sun Pharma, the top loser, 3.5% higher, lower rather. Now, you know, it's on the basis of a rumored sales note that has come out. Don't quite know the veracity or the authenticity of the information of that note as well. For the uninitiated, there is some circulation in the social media about some issues regarding to accounting for Sun Pharma, but as I said, not verified. Don't know if it is authentic or not, so will refrain from saying too much about it. But that's the reason why Sun Pharma has done what it has done. The two-wheeler stocks have corrected today after having a 6% uptick in trade yesterday. Hero MotoCorp is down about 3%. Bajaj Auto 2% higher yesterday, 2% down today. Bharti Airtel is a bit soft in trade today, and the commodity names have continued to languish. So likes of JSW Steel and Tata Steel are correcting in trade today. So also the FMCG names, by the way. HUL, big bang movement trade yesterday, off in the session today. What's done well? IT, by and large, has been one strong mover, and Reliance Industries hasn't done too badly, up about 1.5%. So good moves out there onto Reliance Industries as well. We'll talk about it a bit later on in the show, but suffice to say, this is how the markets are shaping, even Stevens, for the bulls and the bears in today's trade. I'm guessing the scene is the same in the mid-caps, Devina.
Well, there has been some pick up there, and a few stocks near that have pulled up seem to be coming in from the real estate / infrastructure space. So you've got the likes of an IRB Infra, which is doing extremely well in today's session, so closer to 5.5% gains coming in there. HCC, a smaller name out there, 12 odd rupees in the stock, but 6.5% higher today. Suzlon sees some traction. Again, a small stock there. PNB Housing Finance, 3.8% higher. You have a South Indian Bank and RBL Bank, Bata at 996, 2.5% higher. Remember, this month itself, Bata has moved up closer to about 10 odd percent. DLF, again, the real estate flavor coming back in. This month, the stocks moved up about 18%, and today's session gives you gains of 2.5%. Union Bank of India, CESC are some of the other names doing well. Exide Industries, Apollo Tyres, then you have the likes of a Karnataka Bank, Tata Chemical, Tata Elxsi are the other names that are doing okay. In terms of the bigger losers in the session, you've got Bharat Electrical, that's down about 3.5%. JSPL continues to slide lower. Yesterday's session, particularly metals, had a rough ride, and that carries on into today's session. So be it JSPL, be it SAIL, both those counters under pressure by about 2.5% apiece. Mindtree, Interglobe Aviation, Dish TV are some of the other names witnessing some amount of pain this afternoon. But let's find out what's been buzzing in the futures and options space. Agam Vakil is joining in for that. Agam, good afternoon.
Good afternoon, Devina. Well, it's been largely range bound. We're not really looking at too much movement when it comes to the Nifty or the Sensex for that matter. We are looking at a little bit of an uptick when it comes to rollovers, but again, very lackluster because of uncertainty as we move into the next series, which of course the November series expires this coming Thursday. There has been a substantial increase in the December open interest, but not as much for the November open interest. That said, let's take a look at the Nifty banking futures too, and that's where you're seeing a little bit of an accumulation of as much as 8% even in November open interest. This is despite the fact that the banking index is flat at this point in time. The India Volatility Index is now fallen 9.3% after hitting the mark of 20 yesterday. So this perhaps could be, positive for those traders who are who don't want any uncertainty coming through. But we're still above the mark of 18. Now that's your open interest distribution, and your max OI currently at around 10,200, and on the upper end it's about 10,700. Even in terms of today, the changes were around the 10,600 and 10,700 mark naturally, because we've seen largely range-bound moves for the Nifty within these two levels. Let's talk about stocks then. And HCL Technologies stands out here because rollovers picked up at around 30%, 21% added in November futures, even as the stock advances. Just a few days ago, we were talking about HCL Technologies trading at a significant discount, not only to their peers, but also its historical averages of 2 years and 5 years in terms of valuations. Colgate-Palmolive is the other one which is starting to pick up in trade, and another 23% added in open interest, so towards fresh longs. And among other stocks that we're watching out for is Cummins India. This is also towards longs with 26% added in November futures. So 3 stocks out there towards the positive that I'm keeping an eye on today's day of trade.
Got that. Thanks a lot, Agam. That's the futures and options space, and some stocks that are buzzing around thereabouts. Another stock that's buzzing in trade today is Merck Electronics. The company has begun to manufacture television sets for Reliance Retail. How is this likely to benefit the company? Let's ask Mr. Vijay Mansukani, the managing director at the company. He joins us right now. The stock's up about 10%. Mr. Mansukani, thank you very much for taking out the time and joining in. How big is this opportunity for Merck, sir?
Actually, very frankly, that we wanted to make Indians proud of the Made in India label. And at the same time, we wanted to follow Mr. Modi's Make in India label. So what we've done is we've automated our lines to such a degree, and Onida, as you know, neighbors, envy, owner's pride. R&D is one of the best in India, and the quality and innovation is huge. So when Reliance saw that, they said, okay, guys, why don't you manufacture for us, and we'll give you the money, you manufacture under our brand name. So we started manufacturing for them, and now we are doing three models, 43 inches, 55 inches, and 65-inch television, which are the larger size. And now we are doing even other models which are under what you call clearance with the BIS, Bureau of Indian Standards. It's not only for Reliance. Now that Reliance has started coming to us, lots of Chinese multinationals and other worldwide multinationals are coming to us to manufacture, because they want to, the ease of doing business is not there in India. And because the ease of business is not there in India, they say, okay, these guys can at least manufacture, and not Reliance, of course, not Reliance, but the other guys, the Chinese and whoever, I can't take the names, they are asking us to do some logistics and warehousing and distribution and after-sales service. So all these things are there coming. So I believe that India will be the new center for manufacturing. And I do hope that, honestly, I'm the only one who will say that India should increase the custom duties, because then India will keep its foreign reserves to itself, and it will deter imports and it will encourage Indian manufacturing. At the same time, they should reduce the GST, because India has a 20% custom duty and a 28% GST, 48%. Compared to China, it is only 18%. So I think it is a time that India reduced the GST, and you can see huge growth here.
Yeah. So while, by your talks right now, it sounds like a fairly big opportunity for you. How much of this translates into actual numbers, if you could put that in for us?
Okay. Well, very frankly, that's a good question. We just started manufacturing because, you have to get the clearances from the Bureau of Industrial Standards, and we're getting the clearances for everybody. We got it for Reliance, and hopefully this year we should touch about, say, 60 crores, but next year it will be exponential growth. This year, of course, we got only 3 or 4 months, 4 months left now in this financial year. And I mean, it's just started, but it'll be going exponentially next year, not only for A manufacturer Reliance, there'll be B, C, D, E, F, lots of manufacturers, and we'll be doing for them. We might even take it one step further. Beyond manufacturing, we might give them the other whole gamut of logistics, warehousing, distribution, and after-sales service. We have spare capacity of land, and we thought we will build now, and we'll build not only for color televisions, we'll also do it for washing machines, and very soon we'll start manufacturing TVs, air conditioners, and now we'll be self-sufficient, and I think imports will not be unnecessary for India anymore.
So what you're saying is, you did a revenue of about 130 odd crores in Q2 of FY19. So for the balance 2 quarters of FY19, you would see an incremental from this particular order to the tune of 17, 18 crores?
No, 50 to 60 crores. 50 to 60 crores in this one. No, in this one, yeah, it could be a quarter because of the fact that we have only the 4th quarter left now. I mean, and the month of December. So we'll do about, say, 50 to 60 crores in these 4 months. But then in a quarter, it will be 50. So you can assume 200 crores next year. You can assume 400 crores next year. And of course, at the same rate of growth, but I think the growth will be more. So we can expect more than 200 crores next year.
And at a margin of what?
That's quite a good question because it's all marginal costing. The marginal costing, the margins will be about 5%. It will be 5% to 6%. Of course, as you get economies of scale, then the margins will increase even more as you get economies of scale. So that's the main thing.
So how close are you to these other Chinese manufacturers also converting them into actual orders?
Because we have already given them models for clearance from the Bureau of Indian Standards. So once we get the clearance, I cannot take the names because this is an NDA at the moment, but we already given these models for clearance. The moment the models have been cleared by the BIS, we'll start manufacturing. And I can tell you, these Chinese guys will not only want you to do manufacturing, I can see some things happening in the future which are very strategic in nature and not in just conversion of captive manufacturing and non-captive manufacturing. Strategic in nature means they all want to set up shop in India and they really don't know what to do. And why reinvent the wheel when Oneida and Merck Electronics is there with all the infrastructure that we have?
Mr. Mansukhani, just one last question from my end. What does all of this mean for your overall revenue picture for the year at large?
I told you it was 50. It will be 50 to 60 crores this year.
No, that is from Reliance itself,
non-captive.
Right?
Oh yeah, 50. I mean,
no, I mean
only
overall.
Talking about Reliance. I'm only talking about Reliance at this moment. 50 crores.
No, I'm just
10
saying.
Crores.
I'm just saying overall in the first half you've done about 330 odd crores if I'm not wrong. What do you expect to end the second half with?
Oh, this is non-captive. This is only for Oneida. Nothing to do with Reliance.
Yes, I know. So I'm asking for overall Merck Electronics as a listed entity.
Merck Electronics. Yeah. This thing, actually, the first 2 quarters were very bad. Diwali was in the 3rd quarter this year. Last year it was in the 2nd quarter. Diwali was in the second quarter last year this year. So we hope to grow by 5%, at 10%, and we should be about 780 crores this year. 780 crores plus about 50 crores of Reliance. Yeah. Okay. Plus 50 crores of Reliance. And next year it should be plus non-captive should be at least 200. Yeah. And Oneida also should grow healthily next year.
And you would be able to break into the black for a year as a whole because last year you were in the black.
Of course.
This quarter 2 wasn't the best for you.
It was not the best, but please don't look at it from quarter to quarter. Like I said, Diwali was in the 3rd quarter. This is the 2nd quarter. And so we 100% will be in the black this year. There's no question about it. Yeah. There's no question.
Okay. We'll leave it at that. And
thank you.
All the best for the quarters ahead.
All the best. Yeah, I'll give you the good news again after the 3rd quarter.
Sure, we'll talk about it then.
Okay, we'll talk about it then. Take care. Bye.
Thanks, Mr. Mansukhani. Well, that's Vijay Mansukhani. Fairly bullish on the outlook ahead. Now the stock is locked on an upper circuit. I think the numbers that he spoke about was about 60 odd crores in the current financial year from the Reliance deal and 200 as a year at large the next year. I think that's what he was trying to indicate. Well, let's wait and watch if that happens. For now, the market seems to be believing that, and the stock is doing rather well for itself.
Okay, and keeping it with specific stocks, analysts continue to bet on Reliance Industries. The latest to join the list is Bank of America Merrill Lynch. The firm has raised its price target on Reliance Industries to 1,430 rupees. Samit Sarkar is here with more as to what is the rationale behind this upgrade. Samit.
So if you see Bank of America Merrill Lynch says that in the last 5 years, if you see Reliance Industries has done heavy investments in consumer space that has helped the company transform from an oil and gas major to a company with a presence in all sectors in India, that is like telecom, retail, media and in the digital space. And with better traction now seen for Reliance Industries has appeared to cross the tipping point in terms of consumer acceptability on the B2C front, that is the business to consumer front. That is what the brokerage is saying. Now, this shift from business to business to business to consumer will not only help the company sustain its high valuation, but would also drive a re-rating for Reliance Industries going forward, says the brokerage. Now, for Reliance Jio, it is saying that it is expecting Reliance Jio to become the #1 player in the telecom market when it comes to revenue market share in the next few quarters. For the retail business of Reliance Industries, Reliance Retail is currently the largest retailer in India, and this growth is expected to be larger for the company with aggressive expansion plans of the company and because of the robust growth seen across its different formats for Reliance Retail. Lastly, the brokerage has also hiked the target price for Reliance Industries, as now it is factoring in the upside that they are expecting from the various business segments of Reliance Industries, that is media, digital, retail and the telecom business.
Okay, Sumit, thanks very much for that. Reliance Industries, their Bank of America Merrill Lynch betting big on the counter. 14.30, the stock's currently trading at 11.23. On the other hand, UBS has turned cautious on Indian IT. Agam Vakil is joining us with more details on the same and what they believe the rationale to be for this particular cautious note that they have put out. Agam.
Right, Devina, so UBS is trying to address the current trend in the US dollar, which has been, weakening against the Indian rupee, and we have seen that strength, and that of course has a bearing on the Indian information technology sectors, as we have been highlighting. And based on that, as far as UBS is concerned, they are pricing in estimates for earnings, and they're downgrading their EPS estimates by as much as anywhere between 0.2% to minus 2.7% for FY19, and for FY20 it will be minus 2.1% to minus 9.3%. This is again on the fact that we have seen the Indian rupee strengthen against the US dollar, and considering a majority of these companies have over 70 to 80% of their revenues coming in from the US as well as Europe. The other aspect that the report mentions is that to a certain extent the way the stock prices have moved, they're also pricing in revenues going forward, and UBS specifically continues to remain selective. So as far as they are concerned, they continue to remain positive on something like an TCS as well as an Infosys because of their organic growth, which is steady. They're not too certain about those companies which have made acquisitions in the last 1 year, and that's the reason why they continue to remain constructive on something like a UBS and TCS. But on the whole, when it comes to earnings, they are turning cautious, essentially on the weakness that we've seen for the US dollar against the Indian rupee.
Thanks a lot for that, Agam. So that's the word on IT. Now on to the chart of the day segment. Metal stocks are trading at 52-week lows. No surprise, as Chinese rebar prices have also collapsed. But what impact has it had on valuations? Yash Upadhyay is here with the answer in our segment of the chart of the day. Yash.
Good afternoon, Neeraj. So metal stocks, as you rightly said, are trading at some really low valuations. The Nifty Metal Index, that one is trading at a 12-month forward price to earning multiple of about 7.7 times, which is the lowest in at least the last 5 years. Now this implies a discount of nearly 32% to its historical 5-year average of 11.3%, which is another record. Now that apart, we have the 15-member index that has seen a sharp cut in its returns, falling more than 21% on a year-to-date basis. Now this has been triggered by the steep cuts in index heavyweights such as Tata Steel, Vedanta, Hindalco, who are all down anywhere between 20 to 40% on a year-to-date basis. The prime reason for this, as you mentioned, is the weakness in the Chinese steel rebar prices, which have, by the way, corrected by more than 18% from its peak of August. This coupled with the weakness in demand and concerns with respect to US-China trade war concerns have led to commodity prices coming off. However, going forward, we could see a prolonged weakness in commodity prices, says Rakesh Arora of Go India Advisors. This is on account of the less probability or the lowest probability of any positive outcome coming in from the upcoming G20 summit, where the US is likely to slap higher tariffs on Chinese goods, as well as a supply glut in the domestic market.
Thanks for that, Yash. In fact, Rakesh is not the only one. There are a couple of other houses which are saying that too. But look at the impact that we've had on the metal counters in today's session as well. If the rebar prices were down and out yesterday, the stock price correction has been fairly stark today. These are the names which have corrected the most. This Nifty Metal Index, and that too has seen some gyrations. But look at Vedanta, look at Tata Steel, look at Hindalco. By and large, some pain on the screen for almost each of these. Now, I want to draw that chart first up on the screen, something that we showed yesterday as well, but the genesis of what the conversation is around the metal companies, and this is the fall in the steel rebar prices, and quite a steep one over the last couple of months. Now, this is well known. What came out today as a result of this and some of the other factors was brokerages giving out their verdict. So Morgan Stanley came out with a note on some of these metal names, and they've cited a few reasons why they believe the upsides could be capped even if there were some. So these are the risks that MS is putting out. They're saying that the risk reward looks unfavorable for the large steel companies because, one, that the profits are at decadal highs, and two, valuations too, despite the fall, are still trading at a premium to history and global peers. And there is an added risk of domestic demand undershooting the demand that existed in the first half of FY19. Add to that a couple of other factors that Morgan Stanley is putting into place. The leverage for some of these companies. Now, they believe that this is one big concern. Actually, MS, ICICI Securities, and a bunch of other houses has spoken about. In fact, Rakesh Arora in the conversation this morning also spoke about how the leverage is a key issue. And this is what MS is putting out, that the net leverage for the steel companies by and large in the 1 to 1.2 times, but the net debt to EBITDA is about 2.7 to 4 times. And this is not comfortable valuations. So brokerages and advisors by and large are worried about the fact that other companies like Nucor are not going up on high leverage, but the Indian steel firms have a fair bit of leverage. What is only comforting, if at all, is that on an EV/EBITDA basis, most steel companies are trading either at standard deviation or maybe slightly lower. So this is Tata Steel, and this are borrowed from ICICI Securities. Look at this EV/EBITDA chart. It is slightly sub the normal standard deviation. For JSW, I think it is probably at standard deviation or slightly higher. I believe this should be JSW. Yes, it is JSW Steel, and there the EV/EBITDA valuations are just about at standard deviation. But if you look at JSPL, which is arguably amongst the cheapest of the lot, their valuations have come off quite starkly, trading one standard deviation below normal as well, which a lot of people believe is a good level for a stock to rest at. So multiple factors at play here, but certainly a lot of pressure on some of the steel companies, particularly the larger ones. Devina.
And we heard Rakesh also talk about how he prefers his pecking order would be the counters that have a slightly lower debt on their books this time around, because the growth prospects, at least come the next few quarters for most of these steel companies regarding to the subdued demand may actually remain slightly depressed. Let's hear out what Vikas Khemani of Carnelian Capital Advisors thinks on ICICI Bank and Axis Bank. Those are one of his favorite picks that he has been backing all along, and he sees a lot of value creation with the change in leadership that's coming about for both these banks. Listen in.
IT, as I said, that I do believe that will do well, especially mid-cap IT, where companies are winning disproportionately large deals, which as compared to their past history, that will put them into next league. And a lot of large IT companies may not be able to deal with, given the environment, deal with that kind of demand. So I think we have a good case for mid-cap IT companies. I am also bullish on large-cap IT companies, but at the same time, I feel mid-cap IT companies can deliver 15-20% return over the next 3-4 years.
The other pocket, obviously, that's gaining more traction, more attention now is the cap goods space. I mean, with the infrastructure flavor, like a company like L&T, you have Crompton Greaves, from a pure play cap goods space, Thermax. These are all the names that are propping up in terms of interested plays. Would you say that a company like an L&T which has been showing you constant growth, the guidance has been, if they've not really gone leaps and bounds with the guidance, they've been constant with it. So these are the kind of stocks that you need to have in your portfolio to make sure that your returns are actually safeguarded if at all you're not looking at an extreme multifold in terms of returns.
Absolutely. I mean, if you ask me, I think I'm very bullish on industrials, and capital expenditure as a theme, as a sector, because in my opinion it will surprise all of us in next couple of years. Both private as well as public capex cycle has begun, is kicking off, and we are seeing all over signs in the order book and the results, and L&T also has displayed that in a beautiful way. L&T also fortunately corrected some of the past balance sheet issues over the last couple of years. So I think, if you ask me, my personal view is that L&T is very well placed in terms of capturing their own sectoral and yeah, it's a great company, well managed company, and it is to that extent the risk profile is lesser as compared to any smaller company or mid-cap company. So if you are looking for a reasonably stable India play which can give a 15-20% return, I think those are the kinds of names you should definitely look at. But industrials, will do very well over the next 4 or 5 years. It will surprise, in my opinion, it will surpass our expectation, what we have at this point in time.
All right. And we're probably seeing that show up in the IIP numbers also, the kind of pickup that the momentum has. Aside from that, you've been optimistic on the private sector banks, and one particular bank that you really like is ICICI Bank. You want to dwell on that a little bit more and why you like it?
So I think, private sector bank as a theme has been a very good, is under play for last 10-15 years. We had in between a period when some of the private sector banks, especially with the likes of ICICI Bank and Axis Bank, who had large exposure to corporate side, ended up taking a big toll on their performance as well as profitability and all. And some of the organizational issues were there around in both organizations. In my opinion, we have overcome that hump. By and large, balance sheet issues are behind. Both are very incredible franchise. I mean, they have a great CASA franchise, great brand, product portfolio, technology. So everything is, I think, in place. All there was some organizational issue which have been addressed. So I do believe that at that valuation, given the kind of growth runway you have ahead of you, and faith in the new leadership at both organizations, I feel we have a good value creation ahead of us. So far, private sector theme has been at play, but these organizations did not participate, and I do believe they are all set for capturing their lost glory. And based on my assessment, I may be wrong, but I think they are all set for over the next couple of years for a spectacular run.
That's Vikas Khemani of Carnelian. Now, let's focus on today's trade, the last 1 hour of trade left. Let's get in our technical experts on board. Sacchitanand Uttekar of Tradebulls with us, with his thoughts. Sacchitanand, good having you. Thanks much for joining in. How are you approaching trade today? A couple of days into expiry. Are you staying light on the index, or are you actively trading the index?
Good afternoon. In fact, we have been optimistic on the market, and we continue to do so. In fact, the way Nifty and Bank Nifty both are shaping up, especially if you look at the Bank Nifty, it has been an outperformer. And even if you look at today's trading session, despite the lackluster action, the attempt that it has made in the morning of surpassing 26,400, I think that was significant. And with that view, we expect that this particular trigger could, unlock fresh momentum in Bank Nifty. So we are expecting a move towards say 26,630 on the Bank Nifty futures, and with that intention, we are staying long with a stop loss of around 26,155.
Interesting. So that's a call on the Nifty Bank. Would you use options in any way whatsoever, Sacchitanand, for the next couple of days on any of the key indices?
I think 26,400 can be traded with that same view. In fact, it is quoting somewhere close to around 120. And I think keeping a stop loss on the futures, we can participate this particular expectation with the 26,400 call long.
Okay, Amar Singh of Angel Broking with us on the show as well. Amar, good having you. Been a long time. Thanks so much for joining in. How are you approaching trade today in the light of expiry being there a couple of days hence?
I would say overall what we are witnessing is that lower levels definitely are being bought into. And if we look at Nifty in particular, so on the daily charts, we are seeing that the stock, the index is bouncing back, and it is taking good support around 10,550 odd levels. But again, on the higher side, 10,000, I would say 750, 770, that's a crucial level of resistance. You can say roughly 10,750, 800. So it's more or less choppy trading sessions, and also there's a very valid reason for that. If you look at the weekly charts of Nifty, clearly reflects that there is selling pressure at higher levels. whereas the long-term charts, it has taken support and bounced back. So I would say there is going to be choppy trading sessions, but yes, any dip can be used as a buying opportunity. Around 30-40 points below can be used as a buying opportunity, but one needs to remember that upside is going to meet with very strong selling pressure. As I said, around 10,700, 750 levels, that's going to be a crucial resistance zone.
Okay. So selectively bullish on indices, particularly the Nifty Bank, both our experts. Upsides could be met with some selling pressure on the index is what Amar believes. Let's talk about specific stocks then. Amar, I'll start off with you. Your stock specific recommendations for the afternoon?
I would say one can look at HDFC because if you look at HDFC, what we are witnessing is that HDFC has been on the uptrend. And technically also it's positive on the weekly charts. The long-term charts are also fine. And daily charts also, overall, the trend remains positive. So HDFC, one can look at any dip towards 1890, can be used as a buying opportunity with a stop loss of 1862 and a target of 1954 on the upside. And the second stock one can look at is L&T, Larsen & Toubro. What we are seeing here is that the stock is extremely strong on the long-term charts, and even on the short-term, intermediate-term trend, the stock remains extremely positive. That's the reason we are seeing that any dip is being bought into. So L&T dip towards 1415 can be used as a buying opportunity with a stop loss of 1391 and a target of 1475 in the short term.
Right. Let's talk about individual stocks then. And starting off with the big movers in yesterday's session. Before we get to that, Sacchitanand, I want to quickly just go across and get your stocks out of the way and what you're recommending this afternoon.
Well, we have recommended two stocks. In fact, one is Bajaj Finance, where we have been long in this particular counter. Now, since the base, which wound around 1900, 2000 levels, the stock has been oscillating within an upward sloping channel. Currently, in the last 5 trading sessions, we have seen that this particular base has shifted up, and 2300 has been acting as a very strong support. So we expect that once the breakout is in place about 2440, the move can extend right up to 2580. So with that intention, longs can be added here. 2360 should be the stop loss on the trade, and an immediate target of around 2580 could be expected on Bajaj Finance. The second call is a buy call on IT Industries after 2 consecutive bad expiries from the levels around 300. The stock had seen severe pain. 245 has been formed as a very good base, and in last couple of trading sessions we have seen a double bottom kind of formation. Even if you look at today's OI data, there has been a substantial increment which is witnessed, and which also complements this particular pattern. So the pattern target especially comes around 275, and it can be a positional buy. A stop loss should be placed around 250.30, and long positions can be added in IT Industries.
Interesting. Okay. So those are specific stocks, recommendations from our experts. Before we get in our fundamental guest, let's get in Sharad Dubey, who joins in with a list of stocks that are standing out in trade and the reasons thereof. Sharad, good afternoon.
Good afternoon, Neeraj. The first stock I've picked up is Unichem Laboratories, which has increased by almost 11%, a highest intraday move in more than a year. This has been the best performer for the Nifty 500 index today, as because of the news that the company has received 0 observations from US FDA's EIR for Mumbai plant. This indicates the closure of inspection. The second stock which I have picked up is Zydus Wellness, which is up by almost 7% after it received the final approval from US FDA regarding its biclofen tablets. So basically these tablets are used to treat muscle spasms. The third stocks which we have picked up is IFCI, which is up by almost 3.6%, its highest levels in a week. This is based on the news that they have received around 492 odd crore rupees from NCLT on account of resolution passed by Binani Cements. The company holds around 42 lakh security receipts in the cement company. Back to you.
All right. Sure, thanks a lot for that. We've got some interest building up in IT names once again starting to crawl back up. Infosys is up 2.3%, HCL Tech, that's moved up as well, 1.7% higher. Remember, we've been talking about how there was that breach of the 200-day moving average on the Nifty IT index. The entire IT index and the entire pack looked heavily oversold, so whether or not this leads to some kind of a technical bounce back or no remains to be seen. Already some signs of a pickup, and some amount of short covering seems to have come into most of these names. But I'll toss it over to you, Sacchitanand, particularly for the smaller IT names and mid-cap counters, the likes of a Mindtree, Emphasis, KPIT Tech, NIIT Tech. How would you trade these names?
Well, I think most of the signs are very much similar. In fact, in case of NIIT Tech, the 200-day exponential moving average has acted as a very good support. Even yesterday, we saw it slipping below it, and the recovery was very good. So probably there is a sign of an immediate bounce back, but not a strong reversal. So probably the move can extend right up to say 1100, 1120 or so. So probably in case if someone is long in this particular counter, the stop loss can be placed at the 200-day exponential moving average itself around 1076, and with an expectation of a pullback towards it 1120, 1135 zone.
Okay, that's the mid-cap IT pack, the NIIT Tech at 1094. The other pocket, obviously, like we've been talking about, it should pull up to see what the FMCG basket is doing, because yesterday's session that gained a lot of eyeballs, with the HUL particularly doing what it was doing. Today's session a little bit more lackluster. Stocks like Dabur, Jyoti Laboratories, Godrej Consumer, these were the names that saw gains of about 4.5% apiece. Today's session, much of that has been given back. So Godrej Consumer was still in the green by about 0.5%. Amar, would you trade any of these names?
I would say, looking at Godrej, if we see Godrej continues to be extremely strong on the long-term charts. However, on the weekly charts, it is, I would say, trading more or less flat, but there is still possibility that the stock could go up. So any pullback in the stock towards 410, 412, ideally that could be a good level to buy with a stop loss below 400 and a target of 435 on the upside.
Interesting. Okay, sorry. Okay, let's get in fundamental voice on the show. Market expert Nipun Mehta joins us right now with his thoughts, what's happening around. Nipun, good having you. Thanks much for joining in. A bit of a pullback, Nipun, into the IT names the last couple of sessions after falling 17-18%. Is this a dead cat bounce, or do you believe the valuations are now a lot more reasonable and therefore will see some buying, sustained buying?
Good afternoon, Neeraj. As far as IT is concerned, I think while on the one side there has been movement with reference to how the currency has moved, but overall when one looks at large cap IT and the kind of size of large client orders, order inflows that have been coming in, and the kind of relatively more confident management commentary that is coming in, and the fact that anywhere from 10 to 12% growth is what we are seeing on an annualized basis for the top line, I think large cap ITs would justify buying at the current juncture. I think valuations are now looking fairly reasonable. There has been a fair amount of movement as far as mid-cap IT is concerned, but our confidence would lie a lot more as far as large-cap IT is concerned, depending on which geography each of them are operating in, and or the fact that some of them have been really been able to take benefit of consistency of orders coming in from BFSI or healthcare, and or the fact that over the last 2 or 3 years, the larger order flows coming in on AI or big data is something that they've taken benefit of. So yes, large cap IT is something that we would look at positively. Okay,
large cap IT thereabouts. Most of the names they're doing fairly okay. Bank Nifty yesterday saw a good 1.3% uptick. Today as well, carrying forward some strength coming back in, about 1/3% higher from the lows of the day. Nipun, anything within the banking lot that looks attractive to you? I mean, we've been talking a whole lot about private sector banks, and in particular, favorites like ICICI Bank, Axis Bank, new heads at the bank, likely turnaround story for them. Good CASA base for ICICI Bank, likely to help them see a propelled growth. What's your idea of whether or not this could be good investment opportunities from a near to medium term horizon?
Well, banks typically a lot of factors are now gradually coming by. It's not just the asset quality, not just the NIMs, but also the kind of exposure that they have to real estate. Also, the extent of SME exposure that some of them have. Overall, if one looks at the credit growth, I think that's something that has been happening better than over the last 3 or 4 quarters in comparison to the earlier quarters. So that's something that's positive as far as corporate sector banks are concerned. Retail has been showing a reasonable amount of traction, probably valuations to an extent look stretched as far as retail banks are concerned. But if one were to take a high-risk bet, probably PSU banks could, which have far lower valuations, in most cases less than one-time book, would probably be a higher risk bet that some investors could look at from a medium to long-term basis. But one would still want to look at the NBFC space, probably where valuations have come down somewhat. Not necessarily the housing finance companies, but clearly the retail-facing NBFCs, where valuations had been relatively stretched in comparison to the banking space, probably a lot more reasonable now. Given the kind of liquidity easing that we are seeing, probably it's just about another quarter or so where we could see the NBFC liquidity coming back to almost normal, and that's where you could potentially see growth coming by. So the impact of lower liquidity coming on, whether you look at white goods sales or auto sales, that's something again that could change. So our sense is, yes, NBFCs could be a reasonably good bet. A high-risk bet could be PSU banks. Private sector banks continue to be more favored. Our sense is corporate-facing banks more than the retail-facing banks within the private sector banking space.
Okay, got that. Would there be a likely trade in a Yes Bank, Amar?
Yeah, looking at Yes Bank, I would say what we are seeing is that it continues to be weak, and overall there is selling pressure. The stock continues to consolidate because if you look at the stock did make a low anywhere between 165 or so, and it continues to trade on 186. I wouldn't say to be on the long side, because higher levels are to meet with selling pressure, and on the upside 210, 220 is the key level of resistance. And even technically on the intermediate term as well as the long term trend, it is in oversold territory, yet the trend remains extremely bearish. So I would say I wouldn't advise buying.
Nipun, some of the larger, since we are talking about NBFCs, some of the larger NBFCs are facing the brunt of selling. Piramal Enterprises is the top loser today, but it's not just today's move. It's what's happened over the last few days as well. What do you do with some of the names like Piramal? I'm not asking for a stock call here, but does the direction for a Piramal Enterprises, for example, look wobbly at best?
So, Neeraj, I think clearly within the NBFC space, like I said earlier, NBFCs which have relatively high exposure to real estate would always be viewed at differently in comparison to pure retail plays that are there. The real estate slowdown is something which is likely to have at least a shorter term impact in terms of the quality of assets that is there, or in terms of the cash flows that they might have. So one would probably want to look at these plays more from a longer term point of view in comparison to the retail NBFC space that is there, which probably could come back in terms of liquidity, as well as some of them which have fairly strong balance sheets and have the ability to raise at relatively low cost of funds. Those would still continue to be preferred in comparison to NBFCs which have greater exposure to real estate in comparison to the pure retail lending, which could be against autos, two-wheelers, four-wheelers, and or to a limited extent against white goods.
Nipun, a lot of queries regarding Tata Motors and whether or not the stock will manage to see some sort of semblance, post the Brexit deal, and what happens to JLR thereabouts. At 180, would the stock warrant an investment?
So I think wanted to globalize operations. there has been uncertainty or difference in performance in terms of domestic demand and or the global demand that is there. And you're seeing this not just across a company like Tata Motors, but several other sectors, several other companies as well. Whether it is related to trade wars, whether it is related to these kind of political or economic situations, and or even the currency war for that matter, currency volatility for that matter. So when one looks at maybe a company like Tata Motors, which would look at the JLR piece separately, probably I would look at the domestic piece, and within that the commercial vehicle space, and to a limited extent the passenger vehicle space. Each of these three segments are going to be contributing differently in terms of the demand-supply situation that is there. And the uncertainty as far as Brexit is concerned, uncertainty as far as the China demand is concerned for JLR is something that's going to act as a drag, act as a headwind. The commercial vehicle space is showing traction far better probably than the passenger vehicle space. And that's something which is positive. But overall, not better than the passenger vehicle space in terms of the overall contribution to the top line, but not as much as the JLR contribution within Tata Motors as far as the consolidated numbers are concerned. So looking at it from a shorter term point of view, I think that uncertainty will continue. You might see a drag, probably a sideways movement, but we would look at autos, particularly with or doing business on commercial vehicles to be looked at positively from a medium to long-term point of view.
We'll leave it at that, Nipun. Thanks much for joining in today and giving us your perspective. Really appreciate your time. That's the view from Nipun Mehta. Okay, now some news at hand. Remember in the morning we spoke about this piece of news. The market regulator has notified norms making it mandatory for large corporates to raise at least 25% of their long-term borrowings from the debt market. The rules come into effect from the next financial year. Let's discuss the impact of these norms with Mr. L. Shivakumar of ICRA. The whole point being, if indeed a large portion of corporates have to come to the debt market, that the number of issuances go up, and therefore the quantum of work for rating agencies would also move up. Mr. Shivakumar, thanks so much for joining in. This seems to be a win-win of sorts. It's great for, there being a bit of an interconnect between the debt and the equity markets per se, and the corporate debt market gets broadened. But what kind of business uptake does this mean for rating agencies?
Thank you. Thanks for your question. Yeah, it is indeed a positive step. Directionally, we've been moving towards a greater proportion of funding through the bond market. RBI also had come with some regulation in the past, and SEBI also has now come with a regulation. So it's a positive step from the point of view of development of bond market, which is indeed a positive for our business. The extent to which it will help, of course, is a function of what kind of incremental borrowing happens over the next couple of fiscals, which would be a function of how the economic uptake takes place, etc. So overall, I would say it's a positive step.
No, so agree, but ceteris paribus, Mr. Shivakumar, if everything stays as is, and let's work with an assumption the economy does grow northwards of 7%, because that's the best we can assume right now. I know you won't be able to put numbers here, but would there be a big incremental uptick in rating work for agencies by and large, or do you think this will be a very staggered, slow move?
See,
in terms of business?
Yeah, in terms of when we look at large entities, particularly those with rating of AA and above, they have been raising funds from the bond market in the past. So to that extent, it is something which has been happening in the past. But what is different now would be that earlier it was more opportunistic borrowing. That is when, one found bond markets to be more attractive was when one went to the bond markets. Now it will be more even, in terms of the bond market access being more regular or more regularly sought by these companies. So I would say to that extent, it's a positive. It's a little difficult to put numbers, really speaking, because one has to see, what kind of capex happens, going ahead, because most of the NCD funding really happens towards building capex. So one has to see what kind of capex happens over the next two, 3 fiscals.
Okay. Interesting. I was looking at what happened in Q2 for the rating agencies. So while there was growth led by higher volumes, maybe in a rated bank loan, etc., the long-term corporate debt raised continued to be weak. I believe in Q2 for a couple of rating agencies, those numbers were lower by about 25 to 30 odd percent. Could there be a shift on those numbers because of this particular move from Q1 FY19 when this move comes into shape, or maybe earlier, because if a company wants to raise money in Q1 of FY20, I presume it has to start doing the paperwork and the rating work a quarter or 2 quarters before.
Yeah, last couple of quarters since the bond yields had gone up, the bond volumes did get impacted. But going ahead, this regulation will surely help in terms of evening out such spikes. So that's where the positive would come.
Okay. One final question. I agree you can't put numbers to this, but how does business look like, Mr. Shivkumar? If you can take all that we have right now and these added measures by SEBI or something else that would come about, do you believe the next couple of years, if indeed the capex cycle does pick up a little bit and the economy continues to grow the way it has, can growth numbers return for a firm like ICRA?
Going ahead, the growth drivers really would be the pickup of capex cycle, for which, if the economy does well, particularly from the point of view of investment cycle picking up, that's what would be the critical growth driver for us.
Okay. I'm guessing not decisive as yet.
We don't give forward-looking numbers, but the key drivers really would be the growth in the economy.
I'm just asking for the feel that you have about whether or not growth can come back. Not asking for a specific number, really.
That really would be a function of economic uptick and particularly the investment cycle picking up. So we'll have to wait and watch.
You're saying you're not seeing signs of that right now?
If we see last couple of quarters, on a continuous basis, the pickup in investment cycle has been sluggish. So that's something we are yet to see a pickup in.
Okay. I'm guessing you guys would be the first port of call. If you're not seeing this, then it's not happening. I guess we'll probably have to wait for a quarter or two at least, if not more, for this to come back. Good having you, Mr. Shivkumar. Thanks so much for joining in today and giving us that perspective.
Thank you very much.
That's the management of ICRA talking about the SEBI norms and the impact that those could have on the rating agencies. Clearly, it doesn't seem like the growth pullback is coming back in a hurry. No evidence of the capital expenditure cycle picking up in a hurry. It's been sluggish. These new norms, while they come into place, the growth that comes into numbers would only come into effect once there is a pickup or a sustained move in the economy. So, well, the management of ICRA kind of tossing that theory out of the window, literally. Let's wait and watch what happens there. These stocks haven't really moved too much ever, but yeah, just case in point, maybe business picks up. Having said that, let's figure out what is picking up. We're trading about 0.5% higher for the Nifty and the Sensex, so it's good going really. IT is revving up, yes, but and TCS, by the way, is now up 2.5%. I presume trading at the highest point of the day. But the big boy Reliance is not too far behind, 1127 or 1128. Sacchitanand, between the two biggest boys, which of the charts looks more favorable, TCS and Reliance Industries?
In fact, I'm liking both of them. In fact, Reliance, has been an outperformer and it has been sustaining well. But if you look at TCS, the reward to risk is much more sweeter here. The way it has rebounded from its 200-day exponential moving average. This looks like a double bottom which is getting formed. The confirmation of the same will be, above 1950. But the way it has rebounded, I think probably, a stop loss can be placed somewhere close to 1853 and long positions can be added in TCS. Initial target would be around 1960, and in case if this particular level sustains, then probably the move can extend right up to 2020. So I think the reward to risk for this particular trade is much more favorable. So probably I'll go with TCS. But on the other hand, even Reliance, the structure has been very good. So we are optimistic on both the counters.
While we're talking about stocks that are doing well, stocks that aren't are some of the pharma names. So the likes of Cipla, Reels under pressure today. Sun Pharma is down about 3%. And the last 1 month in particular, both these stocks have given up a double-digit losses. So 10 and 11% down for Sun Pharma and 14-15% given up on Cipla. Does the pain continue from here, or do you see any turnaround for any of these names, Sacchitanand?
Well, Sun Pharma, I think the trend has been clearly on the negative side. In fact, the way the recent breakdown has shaped up, I won't be surprised if the stock slides down towards 460. But on the other hand, I think a stock like Oro Pharma is where we are optimistic. In fact, the way it has been outperforming and it has been consolidating. Probably this is one particular stock which can continue its outperformance. We're expecting a price target somewhere close to 840, 845 on the higher side, and it is just a mere consolidation. So probably if I want to take a bet on one of the pharma names, definitely it will be Oro Pharma on the long side. But I would not short Sun Pharma from here on. So keeping a positive bias, I think Oro Pharma would be much more in flavor, and we would like to trade it on the positive side.
Okay, got that. Nifty now making a swift approach towards 10,700. 56 points higher after gaining ground by more than 100 odd points in yesterday's session. So this week in itself, at the start of it has been very strong and leaving behind the 1.5% losses that we had the week prior. It's important also because it's the expiry week. You're going to be having the November series expiry this Thursday, so a lot of activity to be built around there as well. To see the rollovers picking up. In fact, you should actually pull up the Nifty rollovers to see what they are at right now. Nifty Bank and Nifty Futures rollovers around 65 odd percent, 63, 65% by expiry is what you generally land up seeing on both the indices. Rollover 25% so far right now for Nifty Futures. The Bank Nifty Futures rolling over approximately about 26 odd percent. So not bad. You see a pickup in these numbers at the approach of Thursday. But anything else, Amar, that's catching your attention right now in terms of a trading idea?
Say that one can definitely look at Reliance because the way what we're seeing in Reliance is that the stock continues to take strong support, and also technically if you look at the charts on the daily basis, the stock is in consolidation but with a positive bias, and the long-term trend on the monthly charts and further longer-term trends, that continues to remain extremely positive. And even on the intermediate-term trend, what we are witnessing is the stock is moving from oversold territory. So there is a possibility that the stock could significantly trade higher. So Reliance can be a buy. Any dip towards 11.15, 11.20, that can be a good buying opportunity. The stop loss of 1,094 and a target of 11.64 in the short term.
Okay, stay on, gentlemen. So much more to talk about. Time for a quick break here on Countdown. On the other side, we get you the fundamental ideas, picks of the day, as well as the Fab 4 stocks at 3:15. We get you what dealing rooms are recommending in the session today, and at 3:20, some closing strategies from our experts. Stay tuned to Bloomberg Quint Live.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
भाइयों बहनों, केंद्र सरकार राज्य सरकार मिलकर के काम कर रहे हैं।
किसान है हिंदुस्तान का, उसको सही एमएसपी मिलेगी। मुझे बताओ सही दाम मिल रहा है आपको?
मैं पूछना चाहता हूं क्यों चुनाव आगे कराया?
My relationship with Mizoram is a family relationship. It's a relationship of love.
अभी तो सपने और बड़े हैं, मंजिल काफी ऊंची रखी हुई है, वहां तक हम सबको पहुंचना है।
All right, 29 minutes left to go for market closing. It seems like a strong move on the indices. The banks are also doing well, about 0.5% higher. Mid caps and small caps, though, yesterday there was a tinge of underperformance. Today's session just about at par. Should pull up Europe to see what's happening out there and the cues that we're getting in from FTSE, CAC and DAX. So mix there, slightly marginally positive for the CAC as well as the DAX. On the Dow futures, should pull that up too and get a sense of where we are heading, about 0.1% higher right now. Turnover, that should come up on your screen along with the advanced decline ratio. So far, as we approach expiry, today's session turnover has picked up about 9 lakh odd crores for the NSE F&O turnover already, with half an hour left to spare. 26,000 on the NSE cash. Could expect this number to go up till about 30,000. Turnover on the broader markets, just to give you a quick snapshot of the advances versus the declines. So almost neck to neck, in fact, just at par. 769 advances versus 769 declines on the NSE. Our guests are still here with us. We've got Amar as well as Sacchitanand with their views on the technical side, and Chokkalingam of Equinomics Research is joining us right now on the fundamental side. Chokka, thanks very much for taking out the time. Let's get started on what are the fresh ideas in terms of investment plays that you're recommending clients right now.
Yeah, one is Ionias Tradebulls. It's a subsidiary of $85 billion Ionias of Euro. Why I picked up this stock is that there are two solid reasons. One, the stock is down more than 35% from the 52-week high. And two, more importantly, it inputs are derivatives of crude oil. And crude oil price is down now 30%, which is extremely positive for Ionias Tradebulls. And its profitability is very sensitive to oil price. In fact, high oil price impacted its results in September quarter. But going forward, I expect far superior performance in December and March quarter. And also, this company has tried twice delisting in the recent past. Both times it failed. Last open offer was around 600 rupees when the turnover was around 800 crore. Today the turnover is around 2,000 crore and rupees fallen to 70 against dollar. When they did the last open offer, the rupee was around 50. So everything is conducive to think of open offer, because we have seen another comparable company like in MNC space. Linde India has done it. In fact, the CEO of Linde India mentioned that such MNCs don't need money from market. So instead of fulfilling a lot of regulatory requirements, they would prefer to delist. So I expect the delisting to happen from many MNCs, including Ionias. And second is KCP Limited. For last 1.5 years, I have not recommended the stock. First time I am recommending in the last 1.5 years. The stock is down nearly 50% from the 52-week high. The peculiar thing about this stock is that KCP Limited is the only Indian company which has got a highly profitable sugar business outside India. It has got a sugar plant in Vietnam, where they expanded the capacity from 6,000 to 10,000. It is highly profitable despite the meltdown in the sugar prices. And it has also got cement in India, which the company is expanding more than 2 times. And it has got, 4 sources of power supply for cement, all possible sources of power: wind power, solar power, thermal power, hydro power. So, and this makes the cement business highly profitable. And good management, good balance sheet. The third one is MRF. Though it's old, I have picked up again for 2 reasons. One, the oil price is down 30%, so I expect the synthetic rubber price to fall. And second, the natural rubber price also has fallen in the recent times by about 12%, from 135,000 rupees to around 112,000 rupees now. So both are very positive. I expect the turnaround in the profit growth for MRF in the next 2 quarters onwards. So therefore, I strongly recommend MRF as well.
Amar, on the charts, any of these tire companies, is SEAT, MRF, Apollo Tires?
Yeah, looking at SEAT, what we see is that the stock definitely seems to have bottomed out, and the stock seems to be on an up move. But I would say that for SEAT, one needs to watch out for 1280, 1300 levels. That's a crucial level of resistance for the stock. So this temporary respite, I would say, is there, but it would find it extremely difficult to trade above these levels. So the stock could witness some consolidation, but yes, we can say that bottom definitely seems to have been formed for this stock.
Okay. Well, let's take a look at what's moving in the last few minutes of trade as well. Actually, in the last 5 minutes of trade, maybe not too many stocks would have inched up too much, but Jindal Stainless has inched up a little bit. There's some strength in Gayatri Projects, and I think Sterlite Technologies has inched up a little bit to 3.5% higher, now trading in or around the highest point of the day for Sterlite Tech, as also VIP Industries, which is now trading at the highest point of the day. Sacchitanand, these 2 names slightly liquid, so I'll ask you about them. Sterlite Technologies as well as VIP Industries.
Well, the chart structure for Sterlite Technologies has been good. In fact, on the weekly scale, we are expecting that the stock should move towards 420, 425 zone, in a span of next 4 to 6 months. So, the decline that we have seen right now around 345, I think it can be qualified as a pullback, and probably, a stop loss can be placed somewhere close to 318, and long positions could be added on Sterlite Technologies. From a trading perspective, we can expect a move back to around 380, but from a positional perspective, I think the structure is fantastic. The stock may find its way towards the 425, 420 zone soon. So I think I would choose Sterlite Technologies on the long side.
Okay. Those are some stocks. Sterlite Tech at 345. Aside from that, let me just quickly take a look at which stocks are near their 52-week highs. A few names actually, not really that meaningful. You've got Kernex Micro, a small name there, and more penny stocks actually approaching their 52-week highs.
There's a Vindhya Tele, which is doing reasonably okay though.
Yeah, at 1975, 52-week high is 1989. Aside from that, a few stocks which have made some moves in the last few minutes of trade include the likes of an Ultratech Cement and M&M, Grasim. The last 1 hour of trade have seen a move up of more than 0.5%. Dr. Reddy's also sees a spike in the last half an hour of trade. GAIL at 346 has moved up marginally in the last half an hour of trade too. Sacchitanand, and M&M at 752, and if you were to make a comparison within the four-wheeler space, what would your pecking order be?
In fact, if you look at last 1 hour of trade, Escorts is one stock that has been buzzing. The stock has been consolidating for last 3 weeks, and the way the volumes pattern is emerging, I wouldn't be surprised if this particular move extends towards a 720, 735 zone. So probably one can look at Escorts from a fresh momentum perspective. Stop loss for the trade should be placed around 674, and long positions can be initiated initiated here. Even the open interest data has jumped in, so I think there's this huge unwinding which may take place once the stock crosses above 700 levels. So we are expecting a very strong positive traction when it comes to escorts. We have also initiated a buy idea for our clients. Keeping a stop loss somewhere close to 676, fresh longs can be still added here.
Got that. All right, gentlemen, just stay on. We've been talking a whole lot about what's been happening in the steel prices, particularly stock prices, which have been coming off, and not just that, just the metal prices itself have collapsed over the last few days. Slowing Chinese production could indicate further trouble for a global economy, especially for metal firms, says Rakesh Arora of Go India Advisors. Earlier today, in a conversation with Bloomberg Quint, he further speaks about how worse it could get in terms of cuts and implications on Indian players. Hear him out.
Well, see, China is 50% of global demand. So whatever happens in China is highly relevant for the commodity prices. Chinese economy has been slowing down. The last print was 6.5%, and when I read about Chinese economic forecast for next year, a lot of people are talking about number which is closer to 6%. So definitely, there is a slowdown in Chinese demand. And add to that, whatever is happening globally on the trade war, adds to that growing pessimism about demand into 2019. And that is getting reflected into commodity prices now. I wouldn't say that we are already done with the fall. It could be, even worse as things unfold. I think all eyes are on G20 meeting on 1st December. If something positive comes out from there, maybe there might be a little bit of bounce. But otherwise, I think we are in for a more prolonged decline from here on.
Rakesh, the anticipation was that the winter curbs would come in, and therefore there would be a lack of product in the market, because of which most steel producers started to flood the market with inventories earlier on. But because China has been a little bit more lax in terms of implementing these curbs, there is a possibility that the glut remains in the market, which again may not be that good for pricing in the near term. How far worse could this get, and the implications for Indian companies thereof?
So in terms of, you rightly pointed out that this time around the production cuts are less severe, and obviously people were expecting that cuts would happen, but given the state of Chinese economy, I don't think they can really push, and they've changed the barometer by which they measure the pollution index, so that has given a lot of leeway. But having said that, I think it's more to do with demand. Demand slowdown fears are much more genuine, and meaning supply has been there over the last few years, but it was demand which was really keeping the commodity prices up, and now that is under question. How far worse can it go? Meaning historically we have bottomed out wherever when 50% of the producers globally are loss making. So what it means to say that when you are 50% into the cost curve, then only things start to bottom out. We are far away from that. Meaning only recently steel companies were at their decade high profitability. Same was true for zinc, even aluminum to some extent. So we are far away from that bottom if things were to pan out the way it is looking right now.
Do you see the risk for most of the Indian companies getting a little bit more amplified now with the falling in drop in the Chinese steel export prices, as well as the landed cost of HRC products being at a substantial discount to the Indian HRC products, which could mean that the imports could rise thereof, and the implications of that?
Yeah, so meaning Indian market is not really removed away from the global market. So what is happening is going to translate into Indian prices also. Also, don't forget that recently most of these companies have bid for some of those distressed assets, and they will also be very keen to push volume through. So there is going to be a little bit of a supply glut even domestically. So that is also going to add on to the pressure in the domestic market. So overall, things are looking that we are in for a sustained decline in commodity prices from here on.
But do you see, obviously, while we're talking about the lack of economic pickup in China, that probably could not be matched to the economic cycle here in India. Do you see a change in infrastructure spending picking up here, and because of which that could be a slight silver lining for steel companies here in India?
No, India is no match for China. China is 50% of global demand. China is 5%, and India is 5%. So there's no comparison altogether. Whatever happens in India is not going to influence globally, I would say, at all. Now, coming to India per se, there will be a little bit of pickup in demand till March. But remember that we are also heading into election season and things start to slow down. So probably another 3-4 months, and then things start to slow down for 6-7 months. And we get a supply glut from all these revamped, restructured assets which have been bought over. So I won't be really too bullish, despite Indian infrastructure doing better than historically.
All right, keeping an eye out on those flashes there that are coming in. Moody's has cut Yes Bank's foreign currency issuer to a BA1 from Baa3. Also, the outlook has been reduced to a negative from stable. The stock has taken a plunge right now, 3.5% under for Yes Bank at 181.9. Was trading somewhere closer to about 185 odd, but this news probably aggravating this the price on the downside a bit more.
No. No, I'm just wondering, Divina, I was looking at the note that they put out in September wherein they had maintained the outlook on the ratings as stable, and they had mentioned that they expect that the bank can maintain low credit costs over the next 12 to 18 months, and growth in both the interest and the non-interest income will help the bank maintain solid profitability, and therefore the current asset quality metrics are strong. I don't know if the outlook on that has changed and if that has prompted this cut, but certainly having an impact on the stock price today, 3.5% down as we speak.
They have downgraded Yes Bank's baseline credit and adjusted BCA to BA2 from BA1, and they've affirmed the bank's counterparty risk assessment as well. So some indicators there on the downside, and Moody's particularly changing its outlook to negative from stable earlier on. I think that's what you were highlighting there. 180 now on Yes Bank and falling swiftly. 7 odd points given up on the counter.
Mr. Chokkalingam, any thoughts here?
Yeah, in fact, we initiated Yes Bank at 200. I firmly remain very optimistic about Yes Bank. I am not at all concerned about pledging of shares. It is not new to Indian equity market. More than
right
1.5 trillion rupees of.
No, Mr. Chokkalingam, the ratings downgrade.
Pardon me?
The ratings downgrade that has just happened. Not about the pledge shares. The ratings downgrade by Moody's.
Well, it doesn't matter. I stick to my view. You can see after 6 months, 12 months. In 13 also a lot of news flow. Even if a rating is downgrade, they can pledge more shares. Their actual value of holding is at least 3 to 4 times what they have pledged. And, rating agencies basically, whether it is a Lehman crisis or any other issue, it's after the consequent of adverse development, the rating comes. But stock market is always ahead of, the fundamental development for punishing the stock. In my view, the stock is adequately punished. If at all there is anything negative, I don't think the RBI would be keeping quiet. I am sure RBI would have stepped in to probe. So, considering the solid business growth and also steep fall in the stock price, I would consider this as an opportunity. I would buy Yes Bank at current price.
They've also mentioned that the rating action considers the resignation of various members of the bank's board of directors, which when seen in conjunction with the RBI's directive in September 2018 to restrict the term of the bank's MD and CEO. They've raised Moody's concerns over corporate governance. That's what they've mentioned there. And they've also said that the bank's reported credit fundamentals remain stable. The developments surrounding the transition in leadership as well as governance issue are credit negative. according to the note. 181 on Yes Bank. But we'll keep a track on the pricing activity and the movement thereabout for Yes Bank, but now down about 4% odd. Let's shift focus now and get into what dealing rooms are recommending. This afternoon, both Yathin and Darshan are here with us. Good afternoon, gentlemen. Darshan, why don't you start off?
Yeah, okay. So the first stock that's been spoken about and everyone's wondering what's happening with Piramal Enterprises. It's down almost 6%. The broad concern is on the exposure that the company has to Lodha developers. If you're looking at the bond prices of the US denominated Lodha developer bonds, and they have actually come off significantly, almost trading at a multi-year low. The fall no doubt started a few months ago, but that is now, going at a much faster pace. So Lodha developers bond, they have an exposure of close to almost 3,500 crores to Lodha developers. In the con call, Piramal had said that they believe that they have adequate cover, but the market certainly does not seem to believe that. So Piramal Enterprises down almost 6% on the concerns of exposure to Lodha as well as other real estate developers. The other counter that dealers are talking about, no doubt CET is up almost 2%, but some of the HNIs, I spoke to, and some of the dealing rooms did indicate that at higher levels, some of the HNIs are actively trimming positions on CET. Over the past few days, tire stocks have done well, so there is trimming there. And another counter in which there is domestic funds that are accumulating is Amar Raja Batteries. No doubt, the trend of commodities, especially lead, has seen a big decline. That is there, works well for companies like Amar Raja and Exide, which use lead as their raw material. Nevertheless, the counter is doing well on decent volumes. But Yathin, what are you hearing?
Well, Mothers and Sumi, that is one stock wherein dealers do indicate that there is short covering seen in the counter. Remember, a couple of stocks in today's trade, including the IT pack, has seen some short covering. So Mothers and Sumi being one of them. And also we have Infosys, and as I was mentioning earlier, some bit of short covering, and dealers do expect bounce back in IT stocks. So, a couple of them, Infosys, TCS, all of these are on the dealers' radar when it comes to the buying side. 3% up for that one on decent volumes, nearly 1 crore shares plus traded on Infosys. And do watch out for Bajaj Auto. That is one stock, and on the basis of F&O trends, dealers are recommending a sell today, buy tomorrow kind of a strategy in the future and option segment.
Okay, got that. That's Bajaj Auto in focus. Buy today, sell tomorrow strategy that's coming in from the dealing room channel checks. Would you agree, Amar, on Bajaj Auto? Could that be a BTST idea?
Looking at Bajaj Auto, if we see the stock is bouncing back, but I would say that still the stock continues to remain sideways and choppy on the weekly charts as well as the daily charts. I would say rather stay away, because on the upside, again, the stock would meet with resistance somewhere around 2670, 2700 levels, and the downside. So I would say stay away. The stock isn't going anywhere right now.
Sacchitanand, do you track Balkrishna Industries?
Well, we do. In fact, the stock has, seems to have made a formidable base somewhere close to 955, 960 zone. The way it has been shaping up today, probably we may see a good, strong bounce back in the offing. 1030 is the level that we are eyeing for. I think on the lower side, the stop loss can be placed now at around 676, and I think long positions can be added here.
Okay. The top loser today is Hero MotoCorp, down about 4%. So big U-turn for Hero MotoCorp after yesterday's big up move. Sacchitanand, a thought here?
Well, Hero Moto I have recently not tracked it. In fact, we have a bit optimistic on Bajaj Auto. The way it had moved in yesterday's session, I think that particular level is more critical now. I think the stock has to sustain about 3100, and probably we may see an extended move. But as of now, I think this could result as a failure in case the stock starts stepping below 2900. So probably it's a no trading play for when it comes to Hero MotoCorp.
Okay, let's get in closing strategies. A couple of minutes late, but nevertheless, Amar, let me come to you first. Your top closing strategy.
I would say one can look at Escorts India. This is one stock we are seeing a significant pullback, and today, and it's also, I would say, very close to its crucial resistance level of 692.93 levels. So taking that out, the stock has a potential of rallying towards 725, 730 levels. And technically also, if you look on the charts, on the daily charts, the stock remains positive. On the long-term charts also, it's positive. And on the weekly, it's moving from oversold territory, and that also there is some positive indication. So the stock has a potential of rallying towards 735, 740 levels.
Okay, we'll watch out for this. Escorts, the market share intact, or in fact has gained a bit, and the stock is doing well for itself. Sacchitanand, your top closing strategy?
Well, Escorts was one of them. In fact, we discussed it a couple of minutes back. We are optimistic on the counter. I think 700, once this particular level is breached, probably we may see a very strong up move in Escorts. But I think even if you look at PVR right now, the way the data is shaping up, the stock has been maintaining its head below the 1450 high, and it has really not surpassed that level. But probably going forward, we expect that this consolidation which has been occurring, I think this could see a breakout soon. So keeping a stop loss very close at around 1422, probably long positions can be initiated in PVR. We're expecting that once the breakout is in place, the move can extend right up to 1510, 1520.
Okay. Just before we thank Mr. Chokkalingam, just one word on Reliance Industries. 22% over the last 6 months, 18% over the last 1 year, 1 month returns 8%, up about 2% today. Would you invest fresh money here?
Definitely yes. Just to be a little conservative, if there is any dip in the stock price, I would use it because I firmly believe that it would continue to outperform in the next 1-2 years. I expect the company to unlock value for the shareholder by demerging and listing, and also offering the shares of demerged entities to the shareholder, and that way they can create a phenomenal wealth for the shareholders. So therefore, I would keep outperforming rating on Reliance Industries.
Okay, we leave it at that, Chokka. Thanks very much for joining in. Appreciate you taking out the time. That's Chokkalingam there with his views and his ideas. A Spark is down as well, about 3.5%. in the session this afternoon. Following that is JSPL down 3%. Yesterday's session saw a cut of 7% in JSPL. 155 on the stock. Mindtree, Cadila Healthcare 2% given up. NMDC looks weak as well, about 94 on the stock, that's down 2%, and the last 7 days the stock has given up closer to 12%. Sacchitanand, would you go short on an NMDC at these levels?
Well, the stock is nearing a particular support level. In fact, after falling from 120 levels, the stock has never witnessed any pullback. In fact, I would refrain from shorting. In fact, the stock has a good, decent support somewhere close to 94, 93 zone. So, even if you look at some of the oscillators, they are trending in the oversold territory. So, I would, not initiate any fresh short positions here. Probably on a bounce back, we may consider. But as of now, I think we would like to give it a pass.
All right, gentlemen, stay on. We'll just take in final thoughts from you, but here's how the markets are shutting shop. 0.5% higher for the Nifty, about 0.5% for the Sensex. Nifty Bank has underperformed in the session today. Quite stark contrast to what was happening in trade yesterday. The mid caps and the small caps have stayed in the green for most part of the trading day and ending almost at the high point of the day. So not a bad afternoon for the mid caps or the broader markets too. But let me talk about the large caps first. And Infosys about 3% higher in trade. In fact, IT at large has had a very good move the last couple of trading sessions. In yesterday afternoon and today the whole day, IT stood out. TCS about a couple of percentage points. There is HCL Tech about a couple of percentage points higher, and Reliance Industries has gained quite strongly in the session today. Bajaj Finance moves up again about 1.5%. What's not done well? Hero MotoCorp down about 3.5%. Sun Pharma is down about 3.5%. Yes Bank about 3 percentage points. Bharti and Wipro correct a bit as well, and metals by and large have looked weak today. So JSW Steel, Tata Steel and the Vedantas of the world looking slightly wobbly. Last but not the least, at the fag end of the screen is HUL, which gained about 4% yesterday and is marginally off in the session today. But what about the mid caps and the small caps, Devi? How have they looked?
Well, for starters, we've seen some interest coming back in. So at par with what the benchmark indices have done this afternoon, the mid-cap and the small caps are up about 0.5%. More interest, though, have come about in some of the real estate / infrastructure names, and HCC does well. By close today, you'll probably have gains of almost about 6 to 7% on an HCC. Following that, you have a VIP Industries, which has gained ground by trade closing about 5% higher. AstraZeneca Pharma, then you have a Godfrey Phillips. These are the stocks which are closing with positive gains in today's session. Allahabad Bank to the tune of about 4% RBL Bank another 3% higher. Sterlite Tech and Zensar Technologies, from the smaller IT names, are the ones that are gaining ground. However, within the same space, the First Source Solution not doing all that well. So that stock takes a knock in today's session. JK Tires follow that up with Jet Airways. These are stocks that have declined in today's session. Some bout of selling pressure building up in United Breweries as well. KRBL, Proj Industries, and from the metal pack, the pain that was witnessed in a JSPL and a SAIL in yesterday's session, that is exaggerated in today's trade as well. So JSPL loses about 2.5%, and so does SAIL, coming in lower this time around yet again. So in the last 2 days of trade, JSPL losing closer to about 10% already. But that's the close of the markets. Not bad for the benchmark indices. Last 2 days gains, Monday, Tuesday put together, we've seen gains of almost 1.5% plus on the index.
Yeah, and interesting, in the mid caps and the small caps have not done too badly either, so which is actually not a bad sign. Good going for all the key indices. Let's bring up the market breadth. I'm interested in seeing what's happened there and whether it's stayed steady for most part of the trading day today, or whether it's been deceptive, because in yesterday's session, remember, while the indices looked okay, the market bet wasn't the best. In today's session too, while the indices have been in the green, there have been more decliners than the stocks which are advancing in session. So 2 days in a trot now, the decliners are higher than the advances.
But a lot of gyrations, Neeraj. You know, it's a tussle between the bulls and bears throughout the day, if you manage to see that. Towards the end as well, you did have a point where both the advances and declines were at the same point, but then obviously bears taking charge towards the end. But the turnover is going to be important because, well, the last time we took a check, it was already 9 lakhs plus, so closer to 10 lakh crores on the NSE F&O, and 30,000 from 26,000 crores that we mentioned about half an hour ago. So that is picking up on the turnover front.
Yeah, the turnover is good, and contributors, Reliance should be sitting up there somewhere. Yes, Reliance and TCS, the two big boys. Actually, it's all only heavyweights out there. Infosys makes a mark, but otherwise it's the top heavyweights which are marking the presence on the gaining side.
That's the losers then, and Hero MotoCorp flipped its side. Yesterday was one of the top gainers, today one of the top losers, and Yes Bank and ICICI Bank. Yes Bank more so post the Moody's downgrade, the outlook downgrade that came in. But getting in our closing comments from both our experts. Amar, we'll start off with you as we step into trade tomorrow.
I would say that the trend, short-term trend, definitely remains positive. However, on the upside, as I had spoken earlier, anywhere between 10,750, 10,800, that should act as a technical, very strong resistance zone for Nifty, where we could witness some profit booking and we could see some correction. But overall, yes, the trend remains positive. Short-term trend remains positive. So any dip can be used as a buying opportunity. The support for Nifty for tomorrow is seen somewhere in the region of 10,620 or so. So the stock could trade higher.
Okay, Sacchitanand, what about you?
Well, as we discussed, the market strength has been really significant, especially, in today's session. Again, we saw the large caps taking the baton, and I think the way today's closing has shaped up, the next trigger would be around 10,710 and on the spot. And once we have Nifty closing above it, the gates would be open right up to 10,900. So we are optimistic on the market, and we expect that this particular trend would continue so far as 10,560 is held on a closing basis. So clearly, it's a buy on decline market, and we have got ample of opportunities here. I think the next trigger for momentum should be 10,710, and a closing above it could push the index in an amplified mode towards 10,900.
Well, gentlemen, thanks both of you for joining in today and giving us those perspectives. Really appreciate your time and look forward to having you more often on the forum. Happy trading until this expiry. And on a good note, really, for the markets, it's a goodbye from all of us, Devina and me, and the team that put this show together. Thanks so much for watching. and the market wrap with Agam Vakil coming up next.